Thank you very much, Madam Chairman. I want to continue on this line of questioning because, in February of this year, President Obama's Council on Economic Advisors issued its report. It said, quote, an increase in U.S. exports of natural gas would have a number of mostly beneficial effects on natural gas producers, on employment, on U.S. geopolitical security, and the environment. The President's advisors explained that natural gas exports of 6 billion cubic feet per day could support as many as 65,000 jobs. They go on to say that expanded natural gas exports will create new jobs in a range of sectors, including natural gas extraction, infrastructure investment, and transportation. So the President's economic advisors also go on to say that the natural gas exports for the United States would have, quote, a positive geopolitical impact. Specifically, they explain that U.S. natural gas supply builds liquidity in the global gas market, reduces European dependence on the current primary suppliers of Russia and Iran. So I'm encouraged. Your agency, the EIA, predicts that the U.S. will be a net exporter of natural gas by 2017. Would you expand on additional benefits that you see the natural gas exports bring to the United States, if you see additional ones?
Senator, I think it's actually hard to expand on the list that you just went through. I didn't hear anything in there that I would disagree with. One of the things, if Senator Franken were here, the nearest study did find that there might be some impacts on wages from higher natural gas prices. And from what I can tell in the models, many of the models don't deal very well with questions like that, and the effects seem to be pretty small. So that I think that the overall direction that virtually everybody who has looked at this comes to is that that trade, generally speaking, has positive benefits across the economy, and LNG trade is no different.
I also wanted to follow up on Senator Gardner's questions about Iran. Last month, the Wall Street Journal ran a front-page article that I have here. Iran nuclear deal portends rush of oil, new price drop. The article explains that independent observers believe that lifting sanctions on Iran could result in boosting Iran's exports by 800,000 barrels per day within the year. Meanwhile, the Wall Street Journal yesterday, that was a month ago, ran a story yesterday, and this is on page B1, oil industry layoffs hit 100,000 and counting in the United States. Would you discuss the impact that lifting sanctions on Iran would have on American workers in the oil and gas industry?
EIA actually published in our short-term energy outlook our assessment, and we talked a little bit about that earlier, but refreshing. There's 30 million barrels of oil that Iran has in storage that could come out at any time, and how quickly that comes out is hard to decipher. We believe that the Wall Street Journal article that you mentioned said 800,000 barrels a day of growth in production. We think the number is 600,000 to 700,000 barrels a day. Could be 800,000 barrels a day, let's say, by the end of 2016.
Yeah, The Economist this past week said 800,000 as well, but rough, yes. Yeah. Rough.
So, again, our rough assessment is that this could lower the price, everything else held constant. That much more oil on the market, if you just look at how the supply and demand curves have to cross at a price, would lower the price anywhere between $5 to $15 a barrel. That lower price implies lower drilling activity, which would then influence the numbers that you were citing. How quickly all of that comes to pass, whether something else might happen in the global markets. Just as an example, Senator, we are seeing a little bit of a lift in demand. Over the past few months, EIA has increased its estimate of gasoline demand on the back of better income and lower gasoline prices, along with, interestingly, employment, that as the employment numbers have recovered, we're beginning to see people drive more, which leads to gasoline. And trying to get all those numbers to balance is tricky.
I had a final question on the predictions that EIA makes on the average retail price of electricity. It predicted it'll increase as much as, I think, 28% by the year 2040.
Right.
Explains that its predictions now do not take into account the EPA's forthcoming greenhouse gas regulations for the existing power plants. In other words, any increases in electricity prices resulting from these greenhouse gas rules will be in addition to the increases that you currently predict, the 28%. So I understand that EIA plans to issue a separate report on the impact of the EPA's greenhouse gas rule. Can you tell me when you expect to see that report?
Yes, Senator. I think the reference case number was 18% out to 2040 for retail electricity prices. A lot of that coming from higher generation costs because of fuel and largely because of our assumptions of rising natural gas prices. Specifically to your question of will we look at the Clean Power Plan impact? Yes, we will, and I hope to have that report out in May.
Because I know in the past, EIA has sometimes underestimated electricity prices in the reports, and I'm just curious if any specific steps are being taken now to ensure that there isn't an underestimation of the impact of the EPA's rules on retail electricity rates.
Well, we're looking very closely at that, and I would be happy to come up and discuss it with you when we have the report.
Thanks. Appreciate it.
Thank you, sir.
Chairman.